Hello everyone, welcome to this next edition of Market Rubaru. Why we felt we should have this session today was, if you remember, I had done a video with Vithal on 1st April when the market was just about to bottom. Of course, you can't say it had already bottomed, but we were expecting it to be bottomed because some charts were indicating that the downtrend which was there before that, just below 17,000 Nifty, was about to end, and he had shown how one can get ideas of which stocks are likely to move up and how to identify reversals. So that was a session where we talked about looking at reversals when market is reversing and how to catch the early movers. And he had also shown a lot of charts, and most of them have done well. Then again, around at that time, when Nifty was around 17,300. And after that, again, we did another session on 13th May when Nifty had already gone up by 1,000 points. And again, some sort of fear was happening in the market whether this move is going to continue or not. The all-time high 1886 was approaching, and there were a lot of others who were saying, no, that will not be crossed, and we should be short, and a lot of other theories which were suggesting that maybe we will not cross our all-time high. But we had again said that, in fact, Vithal had explained how those at that time it was not a chart of reversals, it was a chart how to follow charts of continuation patterns and get entries with tight or low risk setups, how to identify them. That was on 13th May. And now again, 2 months after that, we are at a place where Nifty has gone up by another 1,500 points. In fact, 3,000 points from the low. And here now, whether the top has been formed or not, no one knows. Now it is quite amusing that we, even on 1st April, we said whether the bottom has been formed, we don't know. Around 13th May, we said whether the top has been formed, we don't know. Today, we are saying whether the top has been formed, we don't know. Then what do we know? We know what the charts tell us. Just to quote one of my old tweets, what's you should never. Trading is something very similar to a cricket bat. If you try strokes from the shoulder of the bat or the toe of the bat, they're definitely going to get mistimed. What is shoulder of the bat and what is toe of the bat? They are nothing but catching tops and bottoms in the market, and those will definitely get mistimed. And the problem with, once you have a bias in your mind that the market has topped out, and though you might get up, maybe you will have a stop loss, you might follow the stop loss, you will get out of the trade with a small loss, but then the bias is so strong in your mind that you just ignore taking long trades. You just don't have the courage to take any long trades. And that is exactly what we are going to discuss today, how after 1st April and then 13th May and even now, how the market has progressed and what we should do now and where we are at this stage in the market. So welcome, Vithal.
Means I'm really happy to share the chart study that we are regularly doing, and yes, definitely we were able to understand the reversal of market right when it really reversed. So people who have not maybe visited that video, the video we made on 1st of April, maybe just we can brief what were the conditions we were looking, and now what can be done after the rally has really happened. So shall I just go through the flashback and discuss about the things that we saw on 1st of April?
Yeah, sure.
Yeah, so the first thing is, whenever we use to identify structurally bullish or structurally bearish scripts, we use a monthly chart where we have a monthly candle, and the indicators used for plotting or identifying this trend or the structure, we use two moving averages. One is 20 exponential moving average and the second is 50 exponential moving average. So I'll just plot that. So let us take it from Nifty 50 first. And if I open the chart and if I come to the monthly time frame, I'm just deleting the previous studies. So we take double moving average. It's a EMA of 20 and it's a EMA of 50 month. So what most of the times we see that most of the corrections of structurally bullish scripts or structurally bullish stocks, they halt at the 20 EMA. So if we see, most of the time whenever it comes here, it halts at 20 EMA and tries to recover from that. And most of the times the 20 EMA has always remained above 50 EMA. And we really don't have on closing basis any follow through happening whenever price has really crossed the 50 EMA also. So this was a pandemic time. Pandemic was definitely something exceptional, but most of the times we see 20 EMA the price has halted. And first time we had three consecutive red candles, and the fourth candle definitely was a doji, and we were identifying that if anything happens, it should happen from here. Either a low has to break or a high has to break. So we were looking for the high getting broken. That would have been the indication for us that now the market is reversing. So
Right.
So here we definitely saw that we had a bullish candle happening, and then we were discussing about some reversal patterns. So this is Bajaj Finance, which definitely we see a close happening below 20 EMA. But again, we don't have any follow through. Price is reversing from that candle, and again we are again coming above that 20 EMA. So this is a kind of reversal we have seen, and this is something now what we thought that if price reverse from here, we will look for bullish patterns, and we were looking for momentum trading in 0.25. We were looking for some intermediate trading in 1%, where we were getting some reversal patterns, or investing strategies in 3%, where we could have gone long right at the bullish column reversal.
I remember you had talked about Titan as well as Asian Paints also.
Yes, Asian Paints also. So these were the stocks. So now we can see this is the chart of Titan, and the month of March we had a bullish candle, and we were anticipating that if this continues, we should look for all the follow through trades, whichever box value we find it suitable, whether investing in 3%, intermediate time frame in cash trading in 1%, or momentum trading in F&O in 0.25%. So every chart has given lot of opportunities, and definitely when we come to the Nifty EOD chart, so whenever we see Nifty in point and figure, we use 0.1% EOD chart, and if I come to the Nifty 50 0.1% EOD chart, so here this was the sign of reversal here, and this was the bearish counts that were active at that time. So we were skeptical whether market will go at 15,900 or in the downside, because none of the counts were getting negated when this anchor column had formed at that time. But we had discussed that whenever this bearish column starts to get negated and we get any follow through buying opportunities above those bearish levels, so these were bearish levels. If we see where we were able to plot the bearish counts, these were all the bearish levels where one by one the bearish levels were getting negated, and we were getting follow through buy signals, multiple buy signals. And the first count here 19,600 was really a clean good rally, and now we have another possibility of 21k still open and active right now. So the possibility here can be like we might have a consolidation happening, because
let me just interrupt. When we say counts, those are just indicative counts. That doesn't mean that is the target which is definitely going to be achieved. But the track record of these kind of counts shows that more often than not they are achieved. But that is not a tradable idea, because for trading you need a stop loss as well. So if one says go long now, there is no visible stop loss. So that you have to identify a good trading stop loss and then trade long. But then here right now, if you say what is the stop loss, it is not a very clear stop loss right now, because today the market has gone down. In fact, as we speak, it is almost down 220 points. So whether to go long now, that is not something which we are recommending. We are just seeing how those previous counts have got achieved, and maybe as we go forward, whenever we get further bullish patterns, the new counts also might be achieved.
Yes, sir, definitely. So now there can be some disparity cooling. So if we come back to looking at any chart, now this is a Nifty chart. I'll open. So I'm coming to NSE all sectors, and I'm referring to the Nifty chart. So Nifty weekly chart with 89 EMA high and low, two moving averages I plotted. One is 89 high and one is 89 low. It is an exponential moving average, and I refer this to understand the bullish and bearish structure. So till the time we are above that channel, we might correct towards that channel level, or we might have a sideways move. So if I plot the disparity percentage here, so we have a disparity index, and we can see now this I am taking it as per the high, because we are above that channel. So I'm taking the high value for the reference purpose right now. So we are taking 89 high, and I'm taking average as EMA. So I'm not referring to the average period. Average period is something where the average line is above or below that raw disparity line, but we will just refer to 89 EMA from the high of 89 EMA. We see there is a lot of steam still pending, because last time we saw that the disparity had gone right up to 30% from that 89 high. Here we can see the value, we can see in the right hand corner window, disparity index. So the value gives us a figure where it was first around 25% from that high, second time it was around 26% from that high. So currently if I come to the last candle, disparity is just 13% from the 89 high. So we still have some room for the upside. Maybe we might have 1 or 2 weeks sideways, or maybe a month of sideways Nifty price action, and then maybe we can also see the rally going to those levels. So like we saw here, when Nifty started to rally, so after we got a breakout here, we see we had a rally, then we had some sideways price action. So this is the time when disparity definitely has some cooling effect, and then again a new rally, and then maybe a top is made. So currently we have that steam left based on the historical price movement of Nifty. So I don't say we might immediately go to 21k or those levels, but yes, looking at the disparity right now, we still have room, and that can be a possibility. Anything you want to add, sir?
Maybe if you can just show this same chart on daily.
Yeah. So if we come to daily also, if I minimize the chart, so it is the values are same, and more or less in the daily time frame we are just peaking at the previous disparity ranges. So
yes,
we can
that is
see
what I wanted to see.
Yeah, so maybe we might have some sideways or some correction, time correction, some price correction. And if we also saw breadth as per yesterday, Nifty 50 and Nifty 500 breadth, so it is definitely overbought right now. So we might
just to remind viewers, we are talking about two things. One is either a price correction or a time correction. Now they are two different things. When we talk about a price correction, that means the price falls and meets the moving average. That is the price correction. Whereas a time correction is the price remains sideways and the moving averages go up and meet the price. That is a time correction. So which one will happen, we can't say, but we'll have to stick to tracking the charts on a day-to-day basis.
So I would follow your instructions right now, as you have always said. Whenever the disparity is high, or whenever we have some extreme conditions like overbought or oversold, market might go sideways or try to go to mean reversion. So these times can be good for, if sideways market, we might see good trades in straddle writing, and maybe we can also look for some options writing where we might definitely get some good moves. So I will be very interested in looking at straddle charts from Monday onwards, and definitely the sideways price action can help me to make some gains in the straddle writing.
Yeah, again, when you say straddle, don't take it as a blind shot. Again, for straddles also we have a setup where only if the setup is triggered, only then it is a short, and with a stop loss. So of course, for that I have also another video on straddles, which was in the month of November. So that video can be referred. So what is the setup for a straddle? So when he says he'll look for a straddle setup, that means he will look for those triggers to go short in a straddle. Because right now it is possible that if market goes sideways, straddles might give good trades.
Considering if we really still have the upside also, and today's correction might show some pullback in some of the stocks, we can also look for follow through buying opportunities if the rally continues. But follow through buying opportunities only can be taken based on smaller risk patterns. So we will discuss what are small risk patterns, how to look for follow through trades, and we'll see something on the web version where we are able to understand the breadth in some other form. So I'll just open. So I am looking at the breadth now for the average true range in a universe of Nifty 500 stock.
Yeah.
So we are taking a OHLC breadth indicator, and I'm selecting the indicator. I'm selecting the group Nifty 500.
500. So
average true range, I'm looking in a percentage sign where I'm not tweaking any of the default values. So it is a 14-day SMA for the ATR percentage. So I'm selecting this, and for looking at the underlying chart, I'm taking Nifty 500. And we are looking, maybe let us take this for a bigger period. Let me take it from last 1 year. So we are able to explain more in detail. So most of the times during some correction or during some whipsaw phase, we see the ATR percentage in many of the stocks rising. So if I just take the values here, I'll take 5%, I'll take 10%, and I'll take 15%. So these are the three levels. So what does this mean? I'll just explain. So I'm taking the average true range. Now I'm taking the average true range for stocks that are above 5% volatile, means ATR percentage in those stocks is more than 5%. And the default, yeah, I'm taking the default parameters, which is 14 as per the default setting, and I'm just looking at a Nifty 500 chart. So I'll scan this, and we can change the date. So from and to dates are custom dates, but I'm keeping it for last 1 year. So I have taken the ATR percentage of stocks which are more than 5% volatile. So if I plot the range here, I want to see 5% level, I want to see 10% level, and I want to see 15% level. If the line, the green line, crosses more than 15% line, that means more and more stocks are volatile, and that is a sign of caution. So if we reduce the chart, we can see the ATR percentage, the breadth indicator is giving me a value of around 1%. So less than 1% means just nearby 1% stocks are more than 5% volatile. And we can see that whenever there is a whipsaw or steep correction, the ATR percentage sharply rises. It sharply rises. This time it was a smooth rally. Once the ATR cooled off and came below 5, that means the stocks having a normal trend and less volatile. So this gives us a good time to trade aggressively. Stocks are less volatile. So unless this the ATR percentage does not cross the 5% line, we are not afraid of trading any follow through pattern. So the market may have some sideways move like we had in between here, some correction, some sideways days we have definitely, but every opportunity can be a new opportunity to go long for the follow through pattern. So till the ATR percentage is normal below 5%, I would definitely have a means I would recommend, and I'm myself also doing follow through trades in the fresh breakouts that will happen. So we might see some disparity cooling, we might see some breadth getting cooled, but definitely follow through trades with low risk patterns can be traded. So this is one more thing that we might keep in mind.
Yeah, what he's trying to say is just because the market has fallen by 220 points today doesn't mean we have turned bearish yet. So it is something to be cautious about, no doubt. So there might be intraday short trades in Nifty as well. But overall, the structure remains bullish, and till we get the breadth, like you said, the ATR percentage, the number of stocks more than 5, there is nothing to worry, and you should keep looking for follow through double top buys. Of course, he will explain a couple of setups. What does he mean by follow through double top buy? And there also you can get a low risk entry and still trade those stocks on a bullish setup.
Yes, sir. So let us come to some charts now.
Yeah.
So when we come to our smart scanner, we have a scanner where we can use multi-chart scanning also, where we can correlate some candlestick patterns with PNF or Renko. So this is something where we can look for analyzing price on one charting type, and also we can look for follow through or reversal patterns on noiseless charts. Second thing, if we go to matrix, in matrix we also have multi time frame price matrix. So system matrix means multi time frame P and F, it is based on price. So now if I open multi time frame matrix, and let us have the smallest universe first for momentum trading F&O stocks. So in F&O stocks, if I see some pattern which is like a double top buy or maybe a bullish setup, so we can create a scanner for a bullish setup where price is above moving average and it is a bullish pattern. For the time being, I'll just take a double top buy. And in all the box values, if I take a double top buy, I get a picture where how many stocks are qualifying for this current pattern.
Type 1 is 0.25%, then type 2 is 1%, 2%, and 3%. So
3%.
he has
Here,
selected.
we can change the values, but let us keep default. I'm not looking at 2%. I'm interested in 3%, 1%, and 0.25%. So we can have some variety of trades here. For time being, I'm just focusing 0.25 because it is a momentum trading in F&O stocks. So if I scan this current universe, it will take the current prices and it will give me the current pattern right now. So assuming that today we are having a bearish day and right now it is around 3 p.m. and markets may close nearby whatever the prices are trading right now. So if we have the bearish close today and let us see in 3%. So here the score 1 is identifying me. So OFS is a example here where the score 1 in 3% is indicating me that it is in a double top buy. So if I open this, I can see in 3% it is a double top buy pattern active right now, and in 1% it can be in a pullback. So this gives me an opportunity for trading either in cash or in F&O. So right now we see we have a good breakout above the down sloping trend line. Also, if we draw a upsloping trend line from the previous bottom, so we don't see prices correcting much below that breakout. We see recovery immediate happening, and now we have broken the down sloping trend line. So here even some reversal patterns can be traded if we get any bullish reversal patterns here. So a 3% recovery in price will definitely have a bullish reversal because this is a 1% chart and 3 box reversal. So any 3% up move will definitely plot 3x, which on a closing basis, if we have 3 or 4x, can become a low risk trade for entry even in the reversal patterns here. And many stocks we can see where 1% and 3% are already in double top buy. Let us export this, and we can filter it immediately and see the names. So I'm just giving this name as a F&O list. So this exercise I do every day, and if I open, so this is the Excel file that we have obtained from multi-time frame matrix. So the score of 1 is indicating it is in a double top buy in 3%. I am also referring to all the stocks which are also in double top buy in 1%. So these are the 2 columns I'm referring where we have a bullish pattern. And now where it is not qualifying, this can become an opportunity for us to look for follow through buying opportunities. So there are a lot of stocks. Now if we see these stocks and we can identify whether they are in bullish trend or bearish trend. So like a stock like BL, which is almost trading at 80h, like a stock of Britannia, which is also like trading at all-time high. So Tata Motors. So there are a lot of names which we see, Polycab. So a lot of stocks definitely are at all-time high, and we are having a minor pullback. Today's price action has not up to now we have not got any bearish reversal, so we are still in a double top buy on bigger box values. So let us take some example like Britannia or Tata Motors or Polycab. Let us see how those charts are looking. So I'm taking 0.25% where it can be a EOD close, and here we can see after a rally we have a sideways price consolidation. So a triangle pattern is into a formation, price is into a consolidation. If we get a breakout, this triangle has definitely helped in cooling the disparity. If we see earlier, the disparity definitely was too higher, this anchor column from the moving average.
Disparity means nothing but the distance between the price and the moving average. So whenever that distance becomes high, that is called high disparity. So what we saw here was that the moving average near that anchor column was the distance was very, very high, and now because of the triangle pattern, price has consolidated, and now the moving average has gone up, which is called a time correction.
Yes, so we might now here, if we see, if I come again and see the risk that is associated if we get a breakout on Monday or later on. So here, if I see, we have number of boxes right now. As per the current price, we have only 7 boxes. So if we have a double top buy, then the double bottom sell will be around 9 boxes. We can add 2 more boxes, one below and one above. So 9 boxes will be a stop loss. So 9 boxes into 0.25 is around 2.25% risk. So this is not much risk. We can definitely look for trading such type of pattern. So the second name was in the F&O stocks. We saw we saw Tata Motors. So it is again one of the trending stocks, and we can see it is even today it did not show any reversal here, because today though Nifty has corrected more than 200 points, we don't even have a reversal in 0.25. So till today also Tata is bullish. So there is no selling pressure even on such day in such type of trending stocks, and definitely we can look for a follow through buy. So here we have 10 boxes as a column of O. So 12 boxes will be around 3% risk if we trade the breakout. So such type of trades where the higher box values are aligned with lower box values can be traded with the risk associated with that trade. Yes, I don't say it will work. Even if we reverse from this level and if we start to correct, the final reversal will definitely happen before means it will trigger our exit first, and then only the correction will happen. So the correction does not happen immediately, and the prices does not just open gap down immediately on the next day. It will definitely give us ample time to exit. So here also, like Britannia, there was a consolidation happening after a trend. We can see the disparity from that moving average price going so far from the moving average. Definitely the disparity cools with the price consolidation, and then next rally happens. So we can participate in such momentum trades. So one more example we saw after Tata Motors was, let me see some names here. So Polycab was one more name. So again, a trending stock. So this can be a ABC pattern into a formation also, because after such a huge anchor column, lot of times we see we have a ABC kind of pattern happening. So this should be kept on watch list, and if we get breakouts, definitely try to trade.
So the idea is identifying stocks where the risk is less and identifying what you can afford, how much risk you can afford. Just because it says that there is a 2.5% stop loss, maybe 2.5% stop loss for him might be okay, but maybe it won't be okay for someone else. But the point is, every trade you have to identify the risk first and then take the trade. Of course, there are other methods also. Even after the double top buy is triggered on the EOD chart, I will ask him to show a method on an intraday chart, how you can take an entry on the intraday chart.
Yes, sir. I will definitely come to intraday chart also. So now here we can see an example of Indian hotel. Lot of sideways price action has happened, but we never saw any selling pattern getting triggered below moving average. Lot of times we see either a low pole or a bear trap patterns happening here, long anchor columns happening here. So this is something where we should look for follow through buy opportunity. So again, if you allow me, I can show you something which I like to see on a broader time or on a broader market. Shall I go ahead? So let us take Nifty 100, I'll discuss something on Nifty 100 which is very peculiar right now. And we go to 1% chart. And on a 1% chart, I'll remove everything. Let us not even plot the moving average. And we will take a very interesting pattern which is called as an anchor support resistance pattern. So why I like to see anchor support resistance pattern is we can see a lot of resistance pattern that get formed on structurally bullish stocks, but the support patterns are getting plotted, means it is like a higher low and a higher high, where the resistance patterns are getting broken and we don't have any resistance right now in the upside, because if we see, it is already broken above all the previous resistances. So this is just some example, like Indian Hotel. Now if I come to even ABV, you can see it has broken most of the Nifty 100 stocks. I see such type of thing where we have broken the resistance patterns, even like about India. So a lot of Nifty 100 stocks and even some stocks beyond Nifty 100, we see such peculiar pattern. BEL is one of the examples again, where we have broken all the earlier resistances. So right now there is like an open sky on the top, and if you see lot of stocks, what have they shown this time? A peculiar price action you can see in lot of stocks. The similarity is you see the bears coming by stairs. So this is a double bottom sell, then again a double bottom sell. So multiple double bottom sells happening, and it is a kind of slow correction. And if you see all patterns getting negated right in one elevator move, so this is a kind of
this is like the old saying which is quite famous: the bears take the elevator and bulls take the staircase. But in this case, typically on point and figure charts, whenever you see too many bullish anchor columns, that is what is referring to. Bulls are taking the elevator and bears are taking the staircase, where it is only consolidating but not crashing. So basically, bears are not powerful at all. In most of the stocks, there are very big bullish anchor columns and then only consolidation. There is no bearish formation, hardly any stock so far.
Yeah, so if we even create a scanner where we have an anchor support pattern at column 0, at column 2, or at column 4. So last at least 3-4 columns we can see we had an anchor support pattern. And if we scan Nifty 500 even on 1%, so this is a 1% chart, and we can see 32% move, we can see a move of 38%. So such type of moves, this is definitely not the move that has happened from the retail part. This has definitely some institutional buying happening, and these anchor patterns are existing in multiple stocks. One can just go and just keep on scanning the charts. We can see such anchor support patterns, and these are the last anchor support patterns which are active. We don't see any anchor resistance pattern. Even a stock like Bosch, we can see we have broken above the previous resistance patterns, and now we are getting follow through buy signals. So definitely it's not a time to look for reversal. Look for affordable follow through trades in the upside till the market really reverses. We will definitely first get out. Our momentum trading will become means the price in even 0.25%, once it goes below moving average, the setup becomes bearish. Definitely our momentum trading will halt once price starts to go in multiple stocks below moving average. We might see some high poles or some bearish patterns in 1% also. So until that time, definitely we have the scope of prices going in the upside. Most of the stocks are breaking around all-time high, or they are just within the all-time high zone, and where we are having small pullbacks. So we can look variety of methods to trade. Low risk opportunities definitely will be offered in days like today, where we have some minor corrections, and that is what I would be looking in the next coming days.
Yeah, in fact, there was a funny story which I saw when in the last DECMA conference, when we were discussing with some traders, and someone asked him, "आपको stop loss से डर नहीं लगता क्या?" He said, "Stop loss से डर क्यों लगेगा? Stop loss उड़ गया तो अच्छा है ना? Then I'll be out of the trade." डर किस बात का? I know when I take the trade and this is the stop loss I'm taking, this is the risk I'm taking. So bullish pattern है तो I'll take the trade. Stop loss मालूम है, I'll exit on that stop loss. As simple as that.
So lot of PSU banks, lot of sectors, PSU we can see a long anchor column, and after that sideways price action and follow through breakout above the anchor. So definitely these counts are active. I don't say that we should take it, but the first count definitely, if you see the historical price plotting, the first count definitely gets achieved even before the correction happens. So a lot of times we have seen that the first count is the area where price immediately goes, and we have some possibility. So such type of stocks where the counts are active and price is giving fresh breakouts, we can look those first counts as probable upside and look for trades with risk associated with that trade. So definitely we won't be in the trade till a major correction happens. We'll definitely have the opportunity to exit first.
Yeah, so the bottom line is don't anticipate, don't predict, just follow the market. If it is presenting opportunities to go long, even at these levels, which is very close to 20,000, why not? So, I mean, the same thing happened at 17,000, same thing happened at 18,000, same thing is happening, had happened at 19,000, same thing is happening at 20,000. No one knows or kitna jayega. That is just a conjecture, that is absolute speculation. So, whether the top is done, again, I repeat, we don't know. Maybe we are in the cooling off stage, maybe some cooling off over the next few days. Like you said, the Brent will cool down. And as soon as the market reverses, all those bullish, probable bullish stocks will start giving triggers. So and it is as simple as that. This is the only way to trade objectively instead of having fear in your mind that the market is going to crash by 2,000 points, 3,000 points, top ho gaya. Now, till election, there will be no rally. That is all absolute speculation. And just follow the charts and treat everything else as bakwas.
So, sir, we also discussed about a 1 minute time frame setup where
Yes.
we can look for some opportunities. So, we have various patterns, like we can see AFT bullish anchor, means AFT bullish is one of the scanners, inbuilt scanners. We can also look for a scanner where we can have a 100% bullish pole follow through. So, 100% bullish pole follow through or AFT gives us a column where it is an eligible column for plotting vertical counts. So currently we can see here, this is one column which is also qualifying for a bear trap. So a bear trap or a 100% bullish pole. So today's price action, we might not get most of the stocks having 100% bullish pole, but I'll just show the scanner. We have an inbuilt scanner for real time, and if we go in a real time scanner point and figure, so this is an intraday scanner. I'm just taking a broader universe to see if we have any. And so 100% pole follow through bullish. So in this case, what I would say is we can also create a scanner where it is 100% pole, but the anchor column is not more than 20 boxes. Why? Because we can also trade that pattern with the counts. Let us first scan and see if we get any name here. Today it is oh, we still have one name. Let us see.
Oh.
So here we have a 100% pole, and the column where the 100% pole formed is less than 20. Why I call it less than 20? Because it becomes a very affordable trading concept. Now you can see we get a breakout. The moment we get a breakout, we can trade this as a swing trade at the breakout. So here at the breakout, this will appear in the live scanner with the anchor low as the stop loss. So the pattern failure becomes a stop loss, and this becomes a target. This becomes a target. So the moment price goes in our favor, it goes to the first count. We can remove the stop loss from the first count and come at the breakout level. So the stop loss, yeah, trail the stop loss to the breakout level. So even if price corrects from here, we will not make a loss. And the moment you get the count achieved, we can look for exiting the trade. So this is a pattern where we can look where boxes are less than 20, because if there are more than 20 boxes, what will happen? The count will be big. So that time the price going to that level is not immediate. So here we saw a similar type of example, which is 100% pole follow through. So once price goes to your first count, you can trail the stop loss from your buy to the or people can also look for maybe be booking at some bearish pattern when price is reverse, or like this has a bearish pattern. So price triggering a double bottom sell below SMA, this can also become an exit level, or your first count can also be half booking if we are doing a cash trade. So most of the times in strong trades, prices achieve the second count. So if we have continuation bullishness happening, we might see some such type of patterns getting triggered.
So like we discussed, again, we repeated whether the market has formed a top, no one knows. We went very close to 20,000 yesterday, though it was not crossed. Today, again, Nifty is down by, like I said, 220 points. In fact, I think while we were discussing, it went down and it has come up again. So whether it's a short-term reversal or not, we will know only by the next couple of days. So, and like I said, the breadth also is overbought, so there will be some cooling. In fact, some cooling is very healthy for the market, but keep looking for opportunities on the bullish side also. Don't become completely biased saying that the market has stopped. So you might miss out on good bullish opportunities, like he has showed some charts where there is a possibility that some bullish opportunities might come. And when the cooling happens of Nifty and that is ending, these probable bullish stocks will be the first ones to give a trigger on the upside. So thank you, Vithal, and as always, was a pleasure talking to you. And the completely systematic method in which he trades really amazes us, and we hope you enjoyed it. Do subscribe to our channel, like this video, and share it. Thank you.
Thank you, sir.